Want to escape the 9 to 5 grind and retire by 45? It sounds impossible, right? But with the FIRE blueprint, abbreviated form of financial independence, retire early, it's totally achievable. Imagine working because you want to, not because you have to. Sounds like a dream, right? Let's break it down step by step in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you by explaining the world of personal finance concepts in a simplified form. So most corporate jobs today pay well, 50,000, 1 lakh, even more per month. Sounds great, right? But here's the catch. Crazy work hours, never-ending targets, a constant fear of layoffs. It's exhausting. No wonder so many people are looking for a way out. This is where the FIRE movement comes in. Work hard, invest smart, and retire early. Now let's clear one thing up. Retiring early doesn't mean stopping work altogether. Most early retirees still work, but on their own terms, like freelancing, starting a passion project, or even consulting. They ditch the stressful 9 to 5 and still make money, often more than before. So how do you get there? Let's talk numbers. Most of us start working around the age 25. The goal? Financial freedom by 45. Here's how FIRE followers do it. First, they invest aggressively, like save up to 70% of your income if possible, and try to live frugally, like avoid lifestyle inflation, and try to own a home, not debt, like no car loans, no personal loans, only assets that will appreciate, not depreciate. And choose smart transport, like use public transport or rentals instead of buying a car. And you can even cut leisure spending by reducing dining out and entertainment to once a month. And dual income helps if married, because both spouses working boosts their savings. And side hustles also matter. You can do freelancing, weekend gig, because extra income adds up in the long run. So the more you invest now, the sooner you escape this rat race. Saving 70% of your salary isn't easy. So how do FIRE followers stay disciplined? They use forced accountability. This is the secret to staying on track. Set up auto transfers to SIPs and retirement accounts, and do public commitment, like announce your FIRE goal to friends and family. And you might have some budgeting challenges, so compete with your spouse or friends to save more. When you create financial obligations that force you to save, there's no way out. Most people make the mistake of putting money in low return investments that barely beat inflation. Here's what to avoid in terms of investment: FDs, like fixed deposit, because the post-tax returns of around 5% is equal to loss against inflation. And also don't invest in endowment life insurance, because the returns are too low, like 5% per year. And also in gold jewelry for investment purpose, because GST plus making charges is equal to reduced profits. And even don't invest in real estate for investment, because high lock-in periods, low liquidity, not ideal for this FIRE blueprint. So if you want to accumulate crores, your investment must grow at 12 to 15% per year, not just 5 to 6%. To build wealth aggressively, focus on high growth, tax efficient investments like equity mutual funds. It gives you 12 to 15% in long-term returns. And also in index funds, they are low cost and has diversified stock market exposure. You can also invest in direct stocks, high potential but only for experienced investors. So why equity mutual funds diversification? Your money is spread across 30 to 60 companies, so lower risk. And also it has tax benefits, like LTCG is up to 1.25 lakh per year is equal to tax-free wealth creation. Equity mutual funds offer the best balance of risk and reward for this FIRE blueprint. The hardest part of FIRE blueprint: staying consistent for 20 plus years. Here's how to stay committed. Treat investments like a bill. Just like rent or EMI, your SIPs should be non-negotiable. Increase SIPs every year. Got a salary hike? Boost your investments instead of upgrading your car. And also review your portfolio on quarterly or even a semi-annually basis to keep you motivated and on track. Most people fail at this FIRE strategy not because they can't invest but because they don't stay consistent. Let's assume a couple spends like 35,000 rupees per month today. With 6% inflation, by the time they retire, their expenses will be 1,12,250 rupees per month. So to sustain until the age of 25, they need a FIRE corpus of 3.06 crores. So how to reach 3.06 crores by 45? You need to start investing 26,750 rupees per month at the age of 25. If your salary is 40,000 to 70,000, this is achievable, and if you can't afford 26,750 rupees, you can start small and increase over time. And post retirement, this corpus will generate 2 lakhs per month at 8% returns. This is more than enough for a stress-free life. So is the FIRE strategy right for you? You see, FIRE isn't easy. It requires extreme discipline and aggressive investing and starting early, preferably at the age of 25. So paying off all debts before retiring and covering major expenses like kids' education, marriage in advance. But if you can commit, the reward is financial freedom. No more stress, no more job pressure, just life on your own terms. So what is the final takeaway? Achieving FIRE means you can travel without worrying about money, pursue passion projects like writing, music, or business, and spend time with family instead of being stuck in an office. But here's the truth: building the right FIRE strategy requires expert guidance. So if you want a personalized FIRE plan, you can contact a professional like a certified financial planner who can create a customized FIRE plan based on your income and financial goals and optimize your investments for max returns and tax savings. You can also ensure your portfolio stays inflation proof. And if you want to retire by 45, don't leave your financial future to chance. Click the link in the description for a free consultation with one of our certified financial planners and start your FIRE journey today. And comment below, what's your FIRE goal? Retire at 45 or 50? Let's discuss. Like, share, and subscribe for more financial freedom tips. We'll see you in the next video with much more interesting financial insights like this. Thank you for watching.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.